Please welcome Scott Blass, President, West Virginia Association for Justice. Scott, good morning. How are you?
I'm fine. Thank you very much, Hoppy.
Thanks. I'm great. Thanks for coming on. And Jill Cranston Rice, President, West Virginia Insurance Federation. Jill, good morning. How are you?
Good morning, Hoppy. Glad to be here.
Glad to have you on. Scott, let's start at the beginning again. Briefly restate why you believe this bill is necessary.
Well, it wasn't simply the derecho last year, as I indicated to you last week. I've been practicing almost a little over 25 years, and I can't count the number of times I've gotten calls from West Virginia residents who have presented a homeowner's claim due to not necessarily a horrific storm, but a lightning strike, a hailstorm, a regional thunderstorm that causes damage to their roof, to their garage. And they asked me the question. I presented this claim, and now my insurance company says they will not renew my policy. Are they allowed to do that? And unfortunately, for the last 20-some years, I've had to tell them yes. And when I became president of WVAJ, one of the things I wanted to look at, because it did come to more of a head after the two storms last year, was to address what other states do about that. And we were able to find between 15 and 19 states that prohibit that type of conduct, because these people that have been insured for 10, 20 years and make one claim, they buy this insurance because they need protection, and it just seems totally unfair for them to be abandoned because of one claim, and unfortunately, right now, that is legal.
Jill Rice, President, West Virginia Insurance Federation. What's your side of this?
Well, our side, Hoppy, is that insurers want to retain business. They want to write policies. They're advertising on television and radio and on billboards all over I-79 and I-77, as you see. And in fact, statistics have shown that these claims are predictive of future loss. And as Mr. Blass said, there are about 15 states that limit it, which means, Hoppy, there are 35 states that do not, because they understand that these claims are predictive of future loss and the risk that these insurers underwrite. In fact, insurers also do, as I indicated, they want to retain the business. They don't want to non-renew their higher risk business. And in fact, even after the large storms of 2012, our insurance commissioner statistics show estimate that $62.5 million of claims were paid. $26,000 claims were made, and that's not even with all of the data reported at the time the data was collected. And even then, Hoppy, approximately 1%, less than 1.5% of the policies in West Virginia in effect were non-renewed. Less than 1.5%. So what we're talking about with Senate Bill 410 is trying to fix something that's really not a problem for 98.5% of consumers in West Virginia.
Scott Blass, is it only 1.5%? I mean, it's a pretty small number.
I've not seen that data, but if it is only 1.5%, one would believe the insurance industry wouldn't be opposed to this, because if you're in the 1.5% and you've been insured for 20 years, why should you be singled out for a claim, for a $5,000 damage claim to your roof? The fact of the matter is, these people are being non-renewed, and it is, at this point, legal. It's illegal in 15 states, and the 35 other states that don't have it, as you might imagine, many are coastal states. And I can understand that, where people are in the eyes of hurricanes on a consistent basis and things of that nature. We are not. And we're not talking about substantial statewide disasters. We're talking about a tree falling on my garage. We're talking about a hailstorm.
Well, let me put a face on this and get both of you to react to this. We're talking with Scott Blass, President of the West Virginia Association for Justice, and Jill Cranston Rice, President of West Virginia Insurance Federation. And there's a disagreement over a Senate Bill 410, which is being pushed by the Association for Justice, which would, they say, their argument is that it would keep these insurance policies from being canceled after people file a claim. Let me give you an example. Well, I'll tell you what. Scott, can you give me an example where you think that the cancellation has really gone too far? Like somebody's canceled and you don't think they should have been canceled, and let Jill react to that. I mean, just you don't have to give a name, but give a real-life example and let Jill react to that.
Oh, I took a call probably late last year of a couple who had been insured with the same carrier for approximately 25 years and had never presented a claim. A tree had fallen on their home, and not only did they have problems adjusting the claim, they were told that because they had presented a claim, they would not be renewed. And as I told you last week, Hoppy, what happens to these, and if it is 1.5%, that's still too much. What happens to these people is once they are non-renewed, they can't get coverage elsewhere. No one else will take them because they have presented a claim in the last 3 years.
Jill Rice, why would that happen?
For a couple of reasons. Statistically, that homeowner is much more likely to have a future claim. I collected some data from our member companies. We're the West Virginia Insurance Federation. We represent more than 75% of the insurance companies that write homeowners insurance in the state. One of our companies reported that a homeowner with one claim is 59% more likely to have another claim. The same policyholder or like policyholder with two claims is almost 100% more likely to have another claim. But yet, 98% of its book of business has no weather-related losses at all. You know, another company indicated that one catastrophic claim in 5 years on a policy, that policyholder is 29% more likely to have a claim in the next 3 years. Companies need to be able to select, one, who it will insure, because policyholders, if insurers are prohibited from considering weather claims, then lower risk policyholders, which again, Hoppy, is the vast majority of policyholders, will be forced to pay higher rates for their insurance, while the other higher risk policyholders would pay less than their fair share.
Scott,
This is a fairness issue. It's called cross-subsidization, where lower risk policyholders are going to pay more for their insurance.
Scott, let me ask you, Scott, would you be concerned about that in that, again, if you have people who are higher risk and they stay in the pool, then everybody's rates go up, is what I'm hearing from Jill.
Well, first of all, the data that she's referring to are claims that are both at-fault and non-at-fault claims. And I can appreciate the fact that if someone causes their house to be damaged by fire because they leave the stove on, that this bill doesn't address those types of claims. And the bottom line is the underwriting of the risk is done before the policy is issued. That's when the analysis should be done before these people are insured. And insurance is all about spreading the risk. And yes, if someone has a $5,000 claim, and this doesn't address premiums either. This just says you can't non-renew them and abandon them in their time of need. You can't say, you made one claim, and guess what? We now think you're too high a risk, so good luck in the open market.
And Hoppy, let me address that. If an insurer decides to non-renew a policy, that consumer is then free to shop the competitive market. Different insurance companies have different business models, some of which are specifically designed to serve a higher risk customer. If a customer ultimately cannot find coverage in the voluntary market, the West Virginia Fair Plan is available. And the West Virginia Fair Plan in West Virginia is extraordinarily small. And that tells us that customers are able to find the coverage they need in the voluntary market. And Hoppy, you remember, that was not always the case in West Virginia. In 2004, we could not find insurance. Insurance companies were not writing insurance in West Virginia, and premiums had skyrocketed. In 2004 to 2008, after our legislature passed rules that enabled and permitted insurers to control their books of business relating to non-renewal laws like we're dealing with right here in Senate Bill 410, the average homeowner policy, not only did the number of policies increase from about 417,000 to more than 485,000, they were writing more policies, but the average policy premium declined by $74 per household. $74 less for an average West Virginia family.
Let me again put a face on this. We're talking with Jill Cranston Rice, President of West Virginia Insurance Federation, Scott Blass, President of the Association for Justice. And again, I'm just making this up, but this is examples been given by Scott. So I'm a homeowner, and I've paid my premiums and for 10 years, let's say, and a big old tree falls on my house. And I have to go to the insurance company, and they pay $20,000 to fix my house. And that's probably not a terribly unusual claim. Then I could be, and you say, Jill, that they want my business, but I could be canceled, right? I mean, I could. I mean, am I then in a high risk category because I filed a claim?
It depends on the insurance company. It depends on the insurance company, frankly.
Okay.
Some may say yes, some may say no. Some may want to retain your business. Some may decide that it might opt to non-renew you. That's the beauty of the competitive marketplace, which we in West Virginia did not have 7 years ago.
And then if, let's say they decide I am a high risk and they drop me, can I go out and can I get insured?
Yes.
Well, I would represent to you, you can go to any website that sells homeowners insurance, and one of the first questions on that claim form is, have you had a claim in the last 3 years? And I can guarantee you, if you answer yes, you won't need to complete the rest of that form. And the West Virginia
there are
Fair Plan,
insurers, that are specifically designed.
Let Scott finish, and then Jill, you respond. Go ahead, Scott.
I'm sorry, Hoppy. What I was saying is, once you fill that question out, then you are with the Fair Plan, and if you don't qualify there, as I told you, your mortgage requires you to have coverage. Your bank will then go into the national market and secure coverage only for your mortgage, not for your contents, not for the replacement value of your home. And if in the 15 or 16 states that have this protection for its citizens, it's just as competitive in those states as it is in West Virginia. It is just as competitive in Arkansas, in New Mexico, in Maine, in Virginia, in Florida, in Texas, Wyoming. All of these states that protect policyholders by telling the insurance industry that's not the right thing to do to people who you collected premiums from for years and years and years.
Oh, Jill.
Because it has an unbelievable chilling effect. These people tell their family, they tell their friends, I made a claim, I got dropped. What do you think those family and friends do? They don't make claims. And that's why the insurance industry wants that protection.
Jill,
that's why they want it.
Jill, let me get your reaction to that.
Well, I mean, as of late summer, early fall, $48.7 million in claims were paid after the heavy storm last summer. The insurance commissioner estimates that $62.5 million in claims were paid last year as a result of the storms. And yet, one of West Virginia's largest homeowners insurer non-renewed less than half of 1% of its business last year. So I feel like Senate Bill 410 is an attempt to legislate based on anecdotes and not sound public policy. This is a step backwards for a competitive insurance market that leads ultimately to consumers paying lower prices and not picking up the burden of the higher risk policyholder.
Scott, do you believe that an insurance company should have the ability to cancel someone if they believe they are just simply too high of a risk?
Well, they shouldn't issue the policy if they're too high of a risk. That is the risk that's analyzed before a policy is issued. When someone's been insured with you for 20 years and you tell me that a tree falls on their home and all of a sudden, 20 years later, they become a higher risk, I find that very, very hard to believe. And it is that there's no statistical data that I've seen that analyzes only those policyholders that have presented claims for weather-related claims. They're talking about all claims, be it someone drives their car through their garage, be it someone does something where they're at fault for the loss.
Jill,
doesn't address this.
Jill, do you believe that do you acknowledge that there are a great number of potential claims that go unfiled, that people just go ahead and absorb the cost because they don't want to be registered as a person who filed a claim?
There may be, but there are times, Hoppy, when the risk presented increases considerably since the policy's inception. And, you know, insurance is a funny product when you think about it. You know, it's not a widget we pick up at the hardware store where the maker of the product knows how much it costs to make the product before it puts a price tag on it. Insurers have to use very sophisticated tools to determine the cost of the product and the cost of the risk before it sells the product. And insurers have to determine how much that's going to cost and how much that risk is going to be before it prices it.
Let me ask you both, and time is short here, but Scott Blass, President, West Virginia Association for Justice, Jill Cranston Rice, President, West Virginia Insurance Federation. Scott, take 30 seconds. Just make a final pitch for Senate Bill 410. I'm going to give Jill a chance to respond.
Well, I would simply say it's not funny to West Virginia policyholders when in their time of need they are abandoned because they have to present a claim through no fault of their own. That's not funny at all. And if it is only 0.5%, I see no reason the insurance industry should be opposed to that. Why shouldn't all people be protected like the people in 15 or 16 other states are? These people have paid dutifully for years for their coverage. They have one claim, and under our law as it is now, a weather-related claim, no fault of their own, they can be non-renewed. And it does have a substantial chilling effect, and I appreciate the fact that Jill can't deny that because it is undeniable. But trust me, that's why the insurance industry wants this ability, because it is a huge chilling effect, and I know personally there are legislators that have done the same thing, that
Jill,
have not presented a claim because of the fear of non-renewal.
Jill, give us, again, a little closing argument here.
Less than 1.5% of, according to Insurance Commissioner's own data, of policies in West Virginia are being non-renewed. Senate Bill 410 is an attempt to fix something that is not broken. 98.5% of policyholders would fall into the lower risk policyholder population and would be forced to pay higher rates for their insurance, while other higher risk policyholders would pay less than their fair share for their insurance. These bills are a step backwards. They undermine consumers' ability to choose by making our insurance market less competitive.
Jill,
Folks can shop around if they're dissatisfied with the way a claim might be handled. These bills chip away at a stable marketplace. Consumers need to have choice, and they should not be forced to pay more for their insurance to subsidize the cost of insurance for higher risk policyholders.
Jill Cranston Rice, President, West Virginia Insurance Federation. Scott Blass, President, West Virginia Association for Justice. Good discussion. Thank you both for coming on. I'm going to watch this bill, Senate Bill 410. Thank you both for coming on.